Hi, everyone. This is Jason Barrack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today, Mo Dawood and I are joined by a returning guest. You're very familiar with him. It's Greg Mannarino. Thank you for joining us again today, Greg.
I am very happy to be here, guys. Thank you.
Greg, the first topic I'd like to discuss with you is what's going on in the Russia-Ukraine crisis. A lot of things have been heating up in that area. Today, Putin threatened to crash the U.S. economy by dumping all of his U.S. treasury, and the U.S. Politicians are threatening economic sanction on Russia. Do you think this is a potential black swan event that could cripple the economy?
I think it's actually a lot more than that. The way I see this playing out right now, I think, first of all, I know that Putin is a brilliant tactician. Now, look, I'm not saying I like this guy or anything. He is a very evil man. There's no doubt about it. But he knows what he's doing. And if you look at what he is trying to achieve here, it's very simple. He wants a return of Russia to an empire status. And he right now is in a perfect position. This has been well calculated, what he is doing at this moment here. He understands that the Western economies, more specifically here in the United States, are very vulnerable to anything with regard to, let's say, the stock market or our bond market or which is our debt market. And he's playing this like a master at this time. I mean, he's got the whole ball game together. He's got the fog of war going for him. He's got psychological warfare. He's denying things, then saying things. He caused the market to drop yesterday. Today, he purposely did this. He pulled
resource war too. He threatened the Western Europe, right, which relies on Russian natural gas, right? He threatened them too.
Oh, absolutely. What he did today was masterful. He pulls his troops back or something from the Ukrainian border. The market rallies. He's trying to push, in my opinion, cash into the equity market. He's going to reverse this. I guarantee you he is in a position to capitalize on it. He is going to attack the United States economically. President Obama can't do a thing about it. Putin knows this. I do not believe he's going to stop at Crimea. I think if he at least wants half of the Ukraine, if not all of it, and he's going to get it because no one's there to stop him. I'll tell you what else is worrying me. Where's China in all this? We just found out, I think earlier today, or was it last night, that China said that they believe these actions are legitimate. I think we could be in for a 1-2 punch here. These two powers are setting themselves up. Unfortunately, you guys know this as well as I do, and I'm sure your listeners are aware. America is in decline, and that void, that power void, is going to be filled by the East.
Yeah, if you guys are familiar, I mean, if you've read Currency Wars, in the war game scenario after 2009, Jim Rickards played this out. China and Russia teamed up. This is the first chapter of the book. This was really one of the most, the book is great. It's a must-read for our listeners who haven't read it, and I'm very excited to have Jim Rickards' second book come out, and we're going to have him on for a podcast in April. But that first chapter, guys, is playing out almost exactly the way Jim Rickards and his other team wargamed it against, that the stupid academics he was playing against in the Pentagon said it wouldn't happen, where China teamed up against Russia. They worked on forming an alternative currency. The Russian central bank is just really the last 3 or 4 years, guys, the Russian central bank has not stopped buying gold. It hasn't allowed any physical gold from any of its miners to leave its borders, and it's been accumulating physical gold basically nonstop. Now, there's some gold that leaves the country, but in general, it's been a net buyer of physical gold from outside of its borders, too. So, obviously, China and Russia, China probably doesn't agree with all of Russia's policies, Greg, because, Putin is ex-KGB, and he does kind of want to reinstitute the Soviet Union with some force and things like that, and they don't have private property rights, and, you can't fully trust the Russians if you make a large investment with them, as a lot of private sector companies in Western Europe and the U.S. would know. But China's willing to, bite the bullet and do deals with Russia because they want to be in that next monetary system. They want to be the two of the leaders of the next system, and that's what it looks like to me. They're both like rapidly preparing for the next system.
Absolutely, that's exactly what's going on here. Again, the America under its current leadership is falling off the map on every front. So there's a void, there's a power void, and it always gets filled. That's what they're doing, and Putin understands this. I think as clear as crystal. Every move he is making, every word that's coming out of his mouth is being very well chosen and has been pre-chosen, and he understands that no one is going to lift a finger. Sanctions, what is that going to do? It's going to raise commodity prices. It'll give him another reason to push forward and take what the Ukraine has to offer. This is a very, very dangerous situation, I think, unfortunately, for the United States, in that it is going to fall down a hole with regard to its reserve currency status, its world power status, and it's kind of laughable. I've been watching the news, and I'm sure you guys have too. You have President Obama talking about how he's going to isolate Russia. Really, how is he going to do that with everybody aligned themselves with China? I mean, there's no possible way this can be done. Absolutely. So when you hear him saying that, you know he has no clue about what he's talking about. We already know this.
He's just trying to act strong in public, though. Obama's just trying to act strong in public. Paper tiger, talk the talk. In terms of, like, if the U.S. actually went in there, I mean, the first thing, Russia's already threatened to do this. Russia would just cut off the Western European, which is the U.S.'s allies, right, from natural gas. And then the people in Western Europe would freeze, and the U.S. would have to start sending emergency natural gas to Europe, and that would hurt the U.S.'s industry, right? So it would just start a really bad chain reaction that I don't think politicians in the West want to do.
They exactly, their hands are tied. It's incredible how this has been thought out here, and I think his move today was brilliant in many ways here. That he's trying to can keep everyone off balance. This is classic. I've read a lot of books on military tactics and military strategy, and what he's doing now by keeping everyone off balance, by telling people these aren't Russian troops in there, by giving conflicting messages with ultimatums and stuff. This is absolutely a setup. He is not done here. I have no doubt about that. And
But, Greg, wouldn't you say that this is the U.S.'s own fault, though, because we've relied on so much debt financing, though, right? And we're so reliant on foreign creditors taking their trade surpluses like Russia and China and reinvesting them back in the U.S. to fund our overconsumption in our consumer sector, our welfare state, our warfare state, right? Because if we were self-reliant, we're self-sufficient, we're an independent country, we wouldn't be we wouldn't be put in the situation politically and economically that we're in now, where Russia could threaten to do this and actually hurt us.
100%, I agree with you. Absolutely. Well, unfortunately, the leadership in this country has allowed this to happen. This has been growing for a long time here. Has been accelerated under this administration. Again, this is just a power void that they're going to fill here, and Putin is going to take advantage of this like you have no idea. Like I believe you have the idea, but I think many people have no idea where this is going to go, and Putin is not going to stop here. What makes people believe he took Georgia, he took the Crimea? He's not done in any way. People have got to be blind or insane or in a state of denial to think that he's done here. And he's going to begin to mount pressure on the United States economy. This is why we haven't done a thing about it. All they're doing is condemning and talking, and he's doing. Okay, so that should tell people what's going on here. Again, today's knee-jerk reaction in the market to rise, I think this was staged. I think this was set up. Putin realized that this was going to happen. He's going to force the U.S. equity. This is our Achilles heel. We understand that the Federal Reserve has allowed the speculation in the market, hyperinflated equities, and this wealth effect is going to disappear as this market falls off of a cliff. I added to every single of my bets against this market today, as a matter of fact. And I continue to hoard gold and silver and platinum and palladium. Unfortunately, this is so bad to watch happen. America is in a steep state of decline, despite what our politicians and President Obama on top of those trying to sell us all. And Putin is taking advantage of everything. And I'm waiting for China's move because I think their move is coming soon.
And also, Jason mentioned currency war. It looks like Putin is taking a page out of The Art of War, where he's attacking the U.S. without even using his military forces by playing this currency wars, where he threatened to dump the U.S. Treasury. It looks like Russia is trying to align with China and other big countries as well to maybe start their own currency and also their own central banks as well. And so one of the other topics out there that I've been hearing is why the U.S. is getting involved in this conflict between Ukraine and Russia. A lot of people don't think Ukraine had any benefit to the U.S. What do you think about that?
Well, it's we've entered into agreements with the Ukraine that we would have their back. I think in 1994 or something like that. And again, it's just the Ukraine is strategically important for many, many reasons, and this is why Putin wants it back. And I'd be very surprised if he doesn't take at least half back, and make it very, very difficult for the West to establish themselves in any way over there. And I can't imagine another way this is going to play out here, in my opinion. And unfortunately, it's just going to make the leadership here in the United States and in Europe look more and more impotent as we move forward here. We're dealing with a man who is a KGB agent. He is a tactician. And every single move, every word that he comes out of his mouth has been well calculated already. And we're flying by the seat of our pants. And we're powerless to do anything. Believe me, he knows that. He's laughing at it. Our own policymakers, they realize this as well. And all their rhetoric is just going to make them look worse. It's unfortunate. They should probably just all keep their mouths shut, in my opinion.
Yeah, what most people don't understand about Putin, like they know about the judo belt and some of the other stuff he's done, but this guy wrote PhD papers on resource nationalization and how to use your resources and how to dominate a market and how to gain control in the world, like politically and economically advance your country that way through basically resource monopolies. So Putin wrote about how Russia can regain its power by raising the natural gas price, by raising the oil price, by raising the uranium price, renegotiating with all the people that want the end use of those commodities. So no surprise that things are playing out that way. In terms of the Ukraine, though, if I could add some to your points, Greg, the reason Ukraine is strategic, there's pipeline politics involved, so there's a lot of natural gas and oil that goes through the Ukraine to Western Europe, but then there is also a lot of grain, a lot of agriculture grown in the Ukraine. It's like the breadbasket of Central Europe there. Between Western Europe and Eastern Europe, it was the top producer of wheat for the Soviet Union, and Stalin murdered a whole bunch of Ukrainians, I believe, in the 1940s. There's a documentary about this. It's not talked about in history books. So he could make it look like on the world stage that communism was doing well. And the other thing with Ukraine is its potash. It has a humongous amount of fertilizer, and that's important, obviously, for the rest of the world's food because almost everyone uses synthetic fertilizers and potash to grow, and that's one of the world's leading suppliers of potash. So Ukraine is a very important country strategically in terms of its pipelines and its food and potash commodities.
Exactly. All this is playing together. It's incredible, and it's sad to be an American citizen and watch this unfold and realize that we're powerless to do anything here, and to see America fall off the map from its status that it had not too long ago. It's heartbreaking to me.
Well, we're powerless politically, but the individual citizen, you, me, and Mo, we can vote with our money and we can vote with our feet. So if we don't like the policy that's going down, we don't have to hold that many U.S. dollars. We don't have to hold that many U.S. treasuries, unless they force us to in the future. But that's another that's another podcast probably. I mean, we can vote with our money, though, so we can buy physical metal, physical gold, silver, platinum, palladium, invest in oil, invest in companies outside the country, things like that.
Oh, yes, absolutely. But I still believe the sad reality is we're going to see this power grab from the East. It's going to affect us all dramatically, and people have no idea yet of what it's going to mean if and when the U.S. dollar is no longer the reserve status, reserve currency anymore. And unfortunately, again, I can't imagine this unfolding in a good way as we move forward here. We have a country that has a debt liability that is unbelievable and mounting. There's no way to fix it. There is a way to fix it, but they won't do it. They're going to, we're at the end stage here, and people like Putin unfortunately see it. Obama does not see it and does not want to do anything about it. He wants to cut our military, cut benefits for our veterans, while countries like Russia, like China, are arming themselves to the teeth. It's incredible. And anyone that is sitting here making excuses here for Obama really has got a problem.
The U.S. military is still outspending, even though Russia may be arming up. The U.S. military is still expending. The problem is I don't think the U.S. can afford another war. I think they're going to spend that money on research and development and stuff. If you've seen some of the projects, on balance sheet and off balance sheet, I think the U.S. is switching to a lot of destroyers now that have like laser weapons, and the first railgun is going to be put on a aircraft carrier or a destroyer in the next 2 or 3 years. So that's an enormous project. I mean, the U.S. is still spending ridiculous amounts of money. The budget cuts and slashes and stuff that they said were going to happen really never materialized. The welfare warfare state just kept on growing regardless of the rhetoric that was said in the 2012 elections.
Yeah. Well, I can say this. It's just going to be really interesting these next couple of weeks here. I think the word is caution with regard to the equity markets here. I can't see a reason why anyone would want to be pouring dollars into U.S. equities at this point. I think you would agree with me. We have the S&P 500 now trading at what, almost 20 times earnings, 19.5 times earnings, whatever it is. I mean, it doesn't make sense. The market is hyper leveraged, and all of this can't play out well. And I think honestly that Putin is getting very well prepared to attack the U.S. economy.
Now let's talk about the stock market. Now, in the past month, you've been calling for a market crash in the U.S. stock market. Right now, I'm looking at the Dow Jones chart, and right now it's at 16,395. And I'm looking at the chart, and it looked like it's bound to correct. Right now, it could go as low as 15,500 is the number I'm looking at. So let's talk about that. You think a market crash is going to come? Is it because of the taper that Janet Yellen did in the past month, or is it other economic data out there that look bearish to you?
Well, I've been seeing a lot happening here in the charts, and I think again, this is relief rally here today. I'm not buying it. In fact, like I said, I added to my positions which are against this market right now. From a valuation standpoint, the market is there's nothing attractive about it. You got a market where we're seeing leverage like we've never seen before. As a matter of fact, I think the last time we were close to this was just before the last bubble. People are borrowing on a margin and maxing that out. So as soon as we get some real momentum here, which could happen at any moment here, again, just if this situation develops and evolves, which I think it will in the Ukraine, and then who knows what China's going to do, we could see some real panic selling. Again, people who are trading in this manner on a margin can lose more than their initial investment. They're not going to allow. They don't want to do that. So I think there's a very high probability. And nothing is 100%. I still think we're probably 70% that this market could experience a significant correction, which we clearly need anyway. And all that will do is present opportunity. That's what all this is. It's opportunity on both ends of this trade, and I intend on capitalizing on both sides. And just keep my eye out here. Got to be cautious, and just pay attention to what's going on here.
How far down do you think the Dow Jones could correct? Are you saying 20%? Are you saying like this what we had in 2008, 2009?
Well, again, there's a lot in play right now. If it weren't for what's going on here in the Ukraine, I would say realistically we could see a 10% correction, maybe a little more than that. But if this escalates, which I think it will, we can see a much deeper correction than that, depending on how they're going to play their treasury play as well, or whether China's going to step in and do something as well. Again, I'm expecting a 1-2 punch here. I think we're going to have the escalation of this Ukrainian thing, and then we're going to have China do something as well, almost simultaneously. And again, these powers, they want what we have, and they're kind of sick and tired of the U.S. dominance here, and the U.S. dollar being the world's reserve.
And I think if we do have some type of market crash, I think the Federal Reserve is going to come back and increase their QE program, maybe even more than what they did before. The highest they claimed that they were printing per month with 85 billion. Maybe they'll crank it up to 120 billion per month. It's a market crash. I wouldn't be surprised to see that.
Especially also, if I could add a point to Mo, especially if Putin or China actually does start rapidly dumping the bonds, they're going to make an excuse to say, oh, QE is we don't have enough inflation, but the real reason they'll start the debt monetization program, increasing it even more after the tapers, is they have to buy the bonds because there's not the demand to buy the bonds. So that's what would happen then.
Oh, I agree, but it's not going. All it's going to do. Well, I don't think it's going to do anything. Once these dollars that are all over the world are not, what should I say, are losing their appeal. What's going to happen to these dollars? They're going to come rushing right back here to the United States. We're going to see massive amounts of inflation. The Fed is powerless. That's another thing. They can't stop what's coming here. They can't print their way out of it. It's absolutely impossible. So from every single angle you look at it, this is not good for our country, for our markets. It's terribly sad to watch this unfold. I tell you, I'm really not happy about this. And I hope people are starting to wake up.
Yeah, I think the Fed's policy, you've read about the wealth effect too, Greg. I think the Fed has had a policy of asset price inflation, like at all costs. Now, in 2008, they allowed everything to fail. They allowed some free market forces. They allowed Lehman to fail, and it started, contagion. It started dragging all the other banks down with it due to counterparty risk. But I think the rules changed after 2008. I think the Fed was really caught off guard. They didn't understand the over-counter derivatives market, how large it was, all the different exposures all the banks had to each other. And I don't think that they would allow at this point, because we have increased manipulation in markets, I don't think they would allow things like that to fail without, changing all the rules and more bailouts and more backdoor bailouts and currency swaps and all these other things. They've already done this to a certain extent. But, any type of asset price correction where 10, 15%, the Fed's going to start getting scared again and going to start threatening to increase the amount of money, because I think we're at the stage, Greg, I don't know if you agree with this, but in the bond market, the real estate market, stock market, if we have a 20% or larger correction in the asset prices, you mentioned the leverage ratios, but all those assets are being held with leverage. You have the yen carry trade. You have massive leverage from the hedge funds in the real estate market who don't even know how to run any properties, but they've bought them all up, driving up the property price. You live in Vegas, so you know the hedge funds are like they're buying up entire rows of houses and streets. And, in the stock market with the margin debt, these guys are going to they're going to collapse again and need bailouts again because of the amount of leverage in the system. So it just seems to me that anytime the asset prices drop, the Fed's going to stick in, and the name of the game is the Fed is basically, creating asset price inflation at all costs because of tax revenues and other reasons.
I agree with you, and I think that's our Achilles heel right there. Putin knows it, you know it, I know it, so does he. Mo knows it, and I can't see how this is going to play out in a good way. Again, you're right. They're going to print. They're going to try to do this. They're going to try to do that. But adding dollars to a system where the dollar is losing its status is not going to help anything. It may as a matter of fact, it may have a reverse effect and make it worse. We're in for a heck of a wild ride. It's absolutely incredible. I was on the phone for about an hour and a half today with Dr. Darrell Shun. You guys know who he is, and we were talking about a lot of this. And he pretty much called that last crash, and he's saying this one is going to be much worse as well. And I have to unfortunately agree with him on that. Very interesting times, gentlemen, and everyone listening. Just pay attention because this is historic.
Now, before we let you go, we got to ask you about gold and silver, which done pretty well since the Russian-Ukraine crisis started to heat up in the past month. If looking at the chart for silver, the resistance right now is at $22, and for gold, it's at $13.50, which doesn't mean much because this market is very manipulated. So don't take my technical analysis to heart. But what do you think is happening in the gold and silver market? Do you think the uptrend that everybody hoped for is finally starting to happen here?
I do. I believe it's going to rise. I think we broke out of a trading range we were stuck in for a long time. I talked about it. I think we've broken out of that. And especially, again, if this thing or when this accelerates, we're going to see a move to, if you want to call them safe haven assets or real assets. And that is only going to boost these prices for metals without any doubt. I think we're going to see, and it can happen at any moment here. And I'm not saying this is, we can't see the market rise for another day or two, but I think this market is ripe to fall. We may see a knee-jerk sell-off with regard to the paper derivatives because of position covering. But again, this is going to probably parallel down a little bit, and then we're going to see a break off where we see the equity market continue down and metals rise. I did go over this phenomenon in my book. I called it an X wave. My timing was off, no doubt about it, but I still think it's going to play out the same way.
So you see a decoupling then, Greg, where the metals and the miners start to decouple then from the general stock market going forward?
I do.
Yeah, I mean, if I could add to some of your points there, without talking about manipulation, just looking at supply-demand for physical gold and physical silver, we had on Kuz Jansen of In Gold We Trust, who has a great website for looking up research for physical demand out of China. He tracks the Shanghai Gold Exchange withdrawals. And so far in 2014, and we're only, 2 months into the year so far, and China has already gotten about 400 tons of physical gold delivered, which is more than annual gold mining supply. So, and they're getting more than 80% of all the physical gold that the Swiss refiners refine. So China is just vacuuming up physical supply from everywhere they can find it. And, you look at the investment banks like the JP Morgans and these guys, and they're all long massive amounts of contracts now on the COMEX, especially in gold. They went from net short now to net long, according to Ted Butler, and they've reduced their net short position, their naked short position in physical silver from over 40,000 contracts naked short. I think they've reduced it by like 80%. They're down below 10,000 contracts naked short now, and they're long a whole bunch of contracts and taking the majority of the deliveries on the COMEX above the position limits. So clearly it looks to me like, the takedown, I think in 2011, I think the manipulation actually increased more than in past years because I think the prices got so high that people like China and other people didn't want the prices to rise that quick. They wanted more metal. I don't know if you guys would agree with that, but it appears in hindsight that people the people who run the world, the governments and the hedge funds and people like that, they wanted the price down further so they could accumulate more cheap metal because they didn't have enough metal. And now they've filled their quota of gold below the level of production cost, silver below the level of production cost. They know the miners couldn't make money at the prices we had, even 3 or 4 months ago. And now they're starting to, allow the market to rise because obviously from a supply-demand perspective, not even talking about manipulation, the miners can't run at losses for forever. This is just common sense. And demand, you look at the demand statistics objectively, and it's clear that demand has been rising. So obviously then, for any supply to continue, it was obvious the price was going to have to go back up at some point.
Absolutely. I'm hearing a lot of the same things as you are with regard to contracts. on the paper derivatives. And I agree with everything else you just said too. I think we might have even spoken about it. I know I've talked about it in interviews I've done as well. And I think we're really at that point where we could see some significant moves here to the upside regarding the physical asset. I've been adding to my positions as much as I possibly can every single month. I do this, and again, but what I want people to understand, and this is what I discuss a lot, is by holding the physical metal in your hand, you're actually betting against the debt, which is the biggest problem of them all. We'll see how this plays out. I really think it's going to be interesting.
Yeah, the problem, in my opinion, Greg, is not just the debt, it's also the currencies, because they're going to print more currencies to cover the debt because there's not the demand for the debt. I mean, the banks are buying the debt.
No, I agree. Currency is, well, when I say debt, I'm referring to currency as a unit of debt as well.
Okay.
Yeah.
Yeah, so currencies and debt are the two main problems here, yeah.
Exactly.
Yeah, I'm trying to convince you, Greg, to buy some miners. I don't know if you bought any gold or silver miners yet, but I think they're due. The last 3 years have been pretty rough, but I think we're going to see some, like we've already seen from the bottom. You know, after the tax lock selling in November, December, we've already seen over 40% moves from some of the miners, but I think that's like chicken shit compared to what's coming in the next 3 to 5 years.
I definitely agree with all that. It's going to be a very interesting time, my friends.
What do you think, Mo, about the miners?
Yeah, I think the miners starting to show some life. We're still seeing a lot of miners getting shut down. We saw some acquisition, although one that didn't make much sense to me was the Silver Standard acquisition that they bought this mine from Goldcorp. I think that was a terrible acquisition, but we're starting to see some life in the miners. A lot of our favorite companies out there are starting to get back on the uptrend. And a lot of the profit margin are improving. Still a long way to go, but we're starting to see the bottom here and a little bit of momentum. So it'll be interesting going forward. And I agree with you that China wants the price of gold and silver to be down. I think a lot of people are wanting the price of gold and silver to be down for different reasons. China wanted the price of gold and silver to be down so they can buy a lot more and maybe going forward, try to strengthen their currency and move forward and try to become a possible world reserve currency. The Federal Reserve wanted lower precious metal prices because they want to keep the dollar stable and the best currency for Americans to use. Wall Street wanted lower prices so they can short it and make money.
Yeah, Wall Street hates gold and silver.
Yeah. I agree with you that a lot of parties out there wanted precious metal prices to be lower. So with that being said, Greg, thank you for joining us for a podcast. If people want to find out more about what you do, where can they go?
Go right to my website, traderschoice.net.
Okay, great. Well, thank you for coming on, and hopefully you come back on again soon.
Oh, thank you guys. It's always a pleasure, yes.